Hey, my name is James Nicholson and welcome to my YouTube channel. There's some huge increases for potentially 500,000 mortgage owners this year. You see, rates dropped to all-time lows in the pandemic and a lot of people took mortgages out for a 5-year period in 2020. And obviously those deals are going to be coming to an end at some point this year. The problem for a lot of people is now with the higher interest rates, they might not get a new mortgage and they could get stuck on the standard variable rate. That could increase their mortgage costs significantly. So in this video, I'm going to talk about what you can do, what rates are, and what is the solution for a lot of people. And is this going to impact house prices and the property market at some point this year? If you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 43,000 subscribers. We're a smidge away, as you can see, somewhere around this video. And let's get some more views on this video by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm, and that's really helped the channel grow. So thanks to everyone that does that. So, it's a crazy world that we live in. I recall the pandemic as if it was yesterday. I had a booming marketing agency, and I remember as soon as we went into lockdown, it was a crazy world. Lots of clients panicked, people wanted to cancel projects, and their clients were doing the same. And everyone having their businesses shut, people on furlough, it just made logical sense that the market would crash at that time. The Bank of England slashed rates in order to help people and try and keep things going a little bit, and also help the government when they were lending out furlough money and they were lending out bounce back loans and all of that kind of stuff. And so it just made logical sense that the market would crash, but it didn't. It did the opposite. There was a temporary blip where house prices went down and then they just took off for a couple of years. Now, during that time, a lot of people would have bought properties and they could have bought those properties at a fairly high valuation at that time. Now, if they only had small deposits or maybe their work circumstances have changed, they could be looking to refinance at significantly more money than they thought. That is a problem. And so some people could be getting stuck on the standard variable rate. And if that happens, their payments are going to go up massively. So how many people does this impact? Well, there's 500,000 people that are coming off these 5-year deals this year between now and December. That's a lot of people. And so those people at the time, the rates that we had around 2020, the average rate was 2.11%. Now I've got rates that are massively lower than that. I've got one that's 1 point something, 1.2, 1.5 is low, right? And that's still on a 5-year deal into next year, so 2026. So I'm hoping rates come down a fair bit for that one to really not have a huge increase in costs. But for a lot of people, it's going to be a real shock. What's the average rate today? Well, the average rate in 2025 sits at 4.9%. So that's a big jump. Now, where we've got to really worry is for the people that can't get a new mortgage. Now, why might you not be able to get a new mortgage? Well, maybe you bought at the very tippy top of the market and you bought on a 95% mortgage. And since then, your house price hasn't massively gone up, so you haven't really built any equity. And because you're at the early part of your mortgage, you haven't paid down lots of that payment. So maybe you've got to 8%, 9% equity now, and the market might not have a good deal for you at 5%. So your options in that scenario are that you've got to top up the balance. You'd have to top up the balance to reduce the lending to go with a new lender. That's one option that some people have. But maybe you've had a really difficult situation, your salary's gone down, your business has closed, and you're just not earning the income that you were when this originally happened. Well, that's when you've got to really be mindful of what could happen and start getting ready and trying to get deal sorted if you can. Because the average standard variable rate at the moment stands at 7.13%. 7.13%. Now, if you based that the average mortgage at the moment stands at 178k, if you're going from this to this, your monthly payment is going to go up by £510 if you get stuck on the standard variable rate. So what should you do in that situation? First and foremost, try and get a new deal with your existing lender. That can be done without all the rigmarole sometimes of checking a new salary, all of that stuff. You can often do a rate switch with your existing lender on your online portal. That could be your best option. Next option is to get active and get a broker. Get a broker that can search the whole market for you and can see what deals they can find for you. It's really important that they look at all the lenders, look at your credit rating. If you've got a CCJ since then, they can still get you money, but the rate might change. But what you don't want is to get stuck on this standard variable rate. This would take your payments up significantly on a monthly basis and wipe out a lot of people. And that's a real concern. Now, what could this do to the property market? Well, time will tell. We don't know for sure how many people are going to be unable to get a new mortgage, but let's just say 20% aren't. Those could be 20% of properties that suddenly flood the market. In a year, we normally sell around 1.1 million properties, and so an extra 100,000 properties could really impact house prices in a downward pressure. Potentially, those houses also could start getting repossessed, and that could lead to downward momentum in the market as well. Now, I'm not saying that that's definitely what's going to happen, but I think it's important to look at all different aspects of the property market. You see, on this channel, we talk about the Rightmove asking price data, and we get scolded in the comments where people say it's irrelevant. I think it's very relevant, the asking price data, because it shows market sentiment. It'll tell you what sellers feel at the moment. We also look at Zoopla data. We've had some Zoopla data this week where we know that the asking price, the sold outcome, on average at the moment is 4.5% below the initial asking price. So that's what we've got to keep an eye on as well and see ultimately where that ends up with sold house prices. We also look at the Halifax data, what's going on with sold prices with their properties, and Nationwide Building Society data, what's going on with their stuff. And ultimately, the ultimate data is the Office of National Statistics data, which we talk about on a month-by-month basis as well. So this is going to be a tough year financially for a lot of people that are coming off those golden deals. Rates have been low for decades, and now you've got 500,000 people that are suddenly going to get exposed to these much higher rates. Let's hope that rates move in a downward momentum for these people, and some of them can catch a slightly better deal. It's not going to get down to the 2.11%, but you might get some that get a 3.25 deal or something like that, and it's not quite as bad as it could have been. Let me know your thoughts, questions, or observations in the comments below. Do smash like, do subscribe. Do make sure you check out all the other content as well on the channel, including this video right here.